And mortgage rates did move higher this week after the Federal Reserve did signal that rates could rise in December. Diana Olick now on how home sales could react.
Home buying slowed down in September for both existing homes and new construction. Now, mortgage rates are edging higher and could jump even more if the Federal Reserve raises rates in December. While it seems like higher rates would only hurt, the CEO of one of the nation's largest builders, Pulte Homes, argues they could actually help.
I predict that if they raise them in small increments, it actually could be a catalyst for the market for people to get off the fence and jump into housing while rates are still relatively good.
If interest rates on the 30-year fixed mortgage went from 4 to 4.5% next year, that would raise monthly costs by about $29 for every $100,000 financed. It's not a ton, but just the fear of paying more later when you could pay less now could make potential buyers more eager to get the deal done now. It could also just make them feel better about buying.
If you have interest rates that go up, that generally means that the economic conditions are improving. Borrowers feel more confident about their lot in life and their economic prospects through job growth and things like that, so they're more compelled to purchase.
That thesis is plausible, except for the supply issue. Mortgage rates are not the biggest headwind to housing right now. It's lack of homes for sale, lack of construction, and consequently, home prices rising far more than interest rates.
2 years ago, we were talking about sellers being locked in. They loved their mortgage and hated their house and decided to stay put. Will this mortgage increase if it happens? Will that make them again hesitant to add to supply? And that supply we desperately need in the housing market right now.
In other words, rising rates could impact sellers more than buyers. For Nightly Business Report, I'm Diana Olick in Washington.